Okay. Okay, yeah. I'm in. Okay. A warm good evening to you all, ladies and gentlemen. My name is Nick, and today I'm going to be taking you through what they call the easy path of trading, that is price action. So today I'm going to be showing you some major concepts, okay? Some major concepts which are involved in the price action. I know a lot of people, they take it for granted, but there is a lot that we need to know in the price action, okay? Like, for instance, if someone can just draw a trend line, if you can just ask someone to draw a trend line, he can draw it in his own way. But now interpretation now, and what's very important is when you draw a trend line or a supply and demand zone, you should be able to get results in the market. Whenever the market approaches that trend line or that supply and demand zone, they should sort of like have some reactions over those areas to show that your trend line or your supply and demand zone is a quality trend line. So today I'm going to be taking you over on how to draw the trend lines and how to draw the supply and demand zones, which are very effective in the market, okay? So within the price action, okay, we need to know that in general, price is a tendency of repeating itself whenever it moves, okay? I always give an example whereby, you know, when it comes to the issue of trading, we are dealing with the movement of orders by the what? By the market. The market is not moved by anything else beyond orders, okay? So how do we know now that there are more sellers than buyers, or there are more buyers than sellers, okay? There are a lot of things, okay? Trading is very practical. For example, if we take, for instance, here in Zimbabwe, okay? Sorry for the other guys from other countries, but I'm giving an example of my country, okay? So here in Zimbabwe, we are talking of, right? This is an example of our what? Of our market watch, okay? Then commodity, that is our staple food. Let's take, for example, we say maize meal, right? I'm going to write in short, okay? Then here is where what? We find our price, okay? Let me just say maybe $1.50, $2, $3, maybe $5, right? Then here is where we find the what? The time, okay? From January to what? To December, Feb, March, whatever, April, May, June, July, August, September, October, November. Sorry about my handwriting, okay? So this is what's happening in our market watch, even up to date, okay? On the bottom, we find time, and here we find what? The price movement, okay? So basically what happens in trading is we are trading maize meal, but maize meal price, okay, is determined by the what? By the supply or the what? Or the demand, right? We all know that during our rainy season from November up to what? Up to something like February, okay? That's when we have the rainy season, then the harvest starts to take place and so forth, right? So within this period, we expect price of maize meal, right, to drop around this stage. Because of what? Because of the period, because we are in period of what? Of harvesting. So the price of what? Of maize meal drops, okay? But because now the supply now continues to what? To lower down. So the price starts to what? To go up. Then around October, November, the price will be at what? At peak. And it starts to what? To go down, right? Repeat itself, repeat the cycle. So this is very important when you are taking your decisions in trading, okay? You must be able to know that whenever this price is moving, right? We have certain price level, okay? Whereby we expect a turning point in the what? In the price movement, okay? So meaning to say that, number one, our price moves in a what? in a certain trend. There comes the ideology of what? Of trend lines. And our price ranges from a certain price to a certain price. Then there comes the what? The ideology of what? Of supply and demand zones. Okay. So this one was my first example. So during the price action, within the price action, okay, we have 4 types of market conditions. Okay, right? Number 1, we have what we call the what? The uptrend. Okay. We have what we call the uptrend. Number 2, we have what we call the downtrend, right? Downtrend. Then number 3, we have what we call the ranging, okay? Number 3, ranging, okay? Then last but not least, we have what we call the choppy market, right? Ranging. Then number 4, we have choppy, okay? So amongst these market conditions, okay, they repeat themselves depending with what? With supply and demand zones at the same time with time. So whenever you make your decisions in trading, time is very, very precious. You should always consider your time. What time am I in? Okay, so that I can be able to know on whether I'm taking a decision to buy or to sell. Okay, so what do I mean about this? I'm going to explain these market conditions in a glance so that we move on to the next stage. Okay. Number 1, on the uptrend. On the uptrend, we are concentrating on creating new highs, okay? Creating new highs. I know we have the higher highs, right? And the higher lows, okay? But now, what's important now for us to note is this. We are much more concerned when we are identifying a market condition, okay? We are much more concerned about identifying the movement of the market. If the market is creating new highs, for example, this one is the high, the previous high of this one, and this one is the previous high of this one, we will know that the market is what? Is going upwards, okay? We are not much more concerned about these higher lows because this higher low can actually create here, okay? Then they'll start to what? To move up. So we can only identify an uptrend by the principle of identifying new highs, okay? Are we together? Yes, okay. So on the lower time frame, the opposite is true again. We are moving with the what? With the lower highs and the lower low, okay? The lower highs and the lower low. So principle is just the same, but in an opposite way, okay? So we are concentrating about breaking these lows for us to be able to note that we are in a what? In a downtrend, okay? So ranging market now, when we are in a ranging market, we're just saying that the market is creating higher highs and lower lows, higher highs and lower lows. It's constantly ranging within a stipulated what? 2 parallel levels, okay? Then when we go to the choppy market now, the choppy market does not have any shape, okay? The choppy market just moves wherever it wants. Usually this choppy market, I call it the accumulation phase, whereby the market makers will be what? Accumulating contracts so as to move with what? With where they attract big orders, okay? So now, without wasting much of your time, I now want to go with you in practical examples so that we know how to draw quality trend lines, okay? Not just how to draw trend lines, but how to draw quality trend lines, okay? Okay, let me do this. So I'm a volatility indices trader, so just bear in mind with me, okay? Right. Here we are, right? Okay, is this a pick or what? Okay, here we are, right? We are going on a practical example now, okay? So this is the step number 1 that you take whenever you approach a market, okay? Whenever you get into the market, you select your pair and you make sure you zoom out. That's the stage number one, so that you can be able now to see the market in whole, okay? The reason for zooming out is that because I want to see what really is happening in the market. So remember, I said stage number one is of identifying what the higher levels, higher high, higher low, or whatever, okay? So now I will start, okay? Usually what I do, okay? I start by what? Identifying the highest high and identifying the what? The lowest low. Therefore, after doing this, the market is coming from the left side going to the right side, and we are anticipating is where the price is right now. We're anticipating it to go on the what? On the left side, okay? So this is what I do. From this highest high, okay, I will now start now to identify my visible lower lows and higher highs, okay? So this one is my lower high because we are going into the what? Into the downtrend, okay? So this one is my lower low, this one is my lower high. Then we move on to the what? To the visible lower low, which is this one. The market retraced up and created this lower high, went back, created this lower low, up, lower high, came back to this lower low, okay? It went back up again to this lower high, went back to this lower low, repeated itself at this position, and went back to the what? To the lower low, went again to the lower high and created this lower low that we are, okay? So the next stage now is this. Whenever you want to draw your trend lines, okay, you begin with now identifying only the what? The lower highs, okay? So this is what I'm going to do, right? This one is my lower high number one, lower high number two, lower high number three, lower high number four, lower high number five, lower high number six, okay? Are we together? Right. Then now I'll delete all these, right? Right, okay. After the reason why I am doing this, okay, right. The reason why I am doing this is because I want to teach you how to draw quality trend lines, okay? After doing this now, you go onto your trend line. Now try to connect all the highs as much as possible, okay? Right? From this high, connecting this high, connecting this high, connecting this high, and connecting this high. As you can see, right? You don't have to be too technical, right? After doing this now, I now want to see the channel in which my price is following, okay? Control left click, check this out, right? Can you see that? This is the channel in which my step index was moving in, okay? So they were trying to push the market up, they got rejected, they went down, they retested, they break, they made a small retest, created this high, okay? Another high, went back, another high, okay? Now, as we are in a downtrend, this is the impulse. How do we know that we are in a downtrend? This is what I want to show you, okay? This is the movement of a downtrend. We say impulse, retracement, impulse, retracement, impulse, retracement, impulse. How do we know that this is an impulse? We know by number of candles, okay? When they are shifting from a level to another level, the present to us with what we call shift candles. They don't negotiate. They just throw the shift candles up to the what? To the lower trend line, do the what? The consolidation, accumulation of orders, okay? Down, shift candles. So another way of identifying a market retracement and a market impulse. Impulses always have lesser candles than retracements, okay? So after doing this, now you will then now try to go to a lower time frame. Before we go to the lower time frame, I want to show you another way of embracing your analysis before you go on to the lower time frames. Like now we have drawn our what? Our trend line. So this channel is the overall channel of the what? Of the step index, okay? Right. Then now we move on to the what? To the supply and demand zone now, okay? Okay, on the supply and demand zone, okay, simply we mean to say the most resisted, okay, or the most supported areas, okay, that we encounter when we are in a what? In a trend, okay? For example, okay, we take this one, okay? Let's look at how many times prices rejected this level. It rejected here when it took the market down, reacted here when it took the market up, reacted here when it retested this position, reacted on here when it took the market what? Down. So this one is a very crucial area, okay? So whenever you're drawing your supply and demand zone, please take note of these huge movements, okay? Don't just draw these supply and demand zones, but take note of these what? Of these hash movements, okay? If price reacted such a supply and demand area or your trend line, it should move violently from that area, meaning to say that it's a what? It's a focal point or an anchor point, okay? Then again, move on to another phase, right? You see my price reacted here when it took the market up. It reacted here when it took the market up. It reacted here when it took the market down, okay? We move on again here, okay? There is an interesting part again, right? My market reacted, going up, reacted again, okay? Then we go on to the what? To the last low, okay? Right. We now move on to 4-hour time frame, okay? Right. Let's move on to 4-hour time frame and see what's happening, okay? At the 4-hour time frame, usually when we are at smaller time frames like these ones, okay? 4-hour time frame is a bigger time frame though, okay? But usually, if you want to take your swing trades, okay, we use a little bit of higher time frames from 4-hour and 1 hour, okay? Remember, we have what we look for in the market, okay? After identifying your trend lines and supply and demand zones, you therefore wait for reversal patterns, break and retests, okay? Right. So what do I mean about this? For example, when price reached this resistant area, they presented to us with a what? 3 hits to the what? To the high, okay? Let me zoom in and show you, okay? Okay, sorry. Okay, yeah, here we are. As you can see, price went up here. It got rejected for the first time. It came back, went up again, got rejected, went up here, got rejected, went up here, and started moving what? Moving down, okay? So now, when we are now at 4-hour time frames, this is what we do, okay? You will now start now because there is a lot of noise on these lower time frames, okay? This is what we require when we are at 4-hour time frames, okay? On the retracements areas, we can as well trade these retracements because remember, if you only wait for daily time frames, you cannot be able to what? To trade almost like every day, okay? Remember, I told you about the what? The principle of drawing trend lines, okay? I will now try to show you using this lower time frame on how to draw my what? My supply and demand zones or my trend lines at a lower time frame, okay? Now I'll begin from this point. Put this in yellow, okay? So from this point up to this focal point, okay? So remember, this is an uptrend up to this area. This is an uptrend, okay? So as I've said, when we are in an uptrend, what do we anticipate for? We anticipate for new highs to be what? To be formed, okay? So when my price, okay, went up from this area, it created this what? This higher high and came back and created this low, okay? Created another high here, came back and retested this low, went back up and created this high, came back and created this low, and went back to create this what? This high. So meaning to say, my uptrend was based on, okay, let me show you, right? This one was my lowest low, okay, followed by this one. Hello, excuse me, sorry, I'm in a Zoom. Okay, so followed by this low, followed by this low, followed by this low, right? Okay. This, okay. So when drawing my trend line, okay, remember I told you that whenever we are in an uptrend or a downtrend, we anticipate to trade the retest of the what? Of the trend line at the same time in supply and demand zones, okay? So I'll now try to connect these laws, okay? For example, I connected these laws like this, okay? And put a blue trend line. So it's always good to change your trend lines again as you move on to what? To lower time frames, okay? So that whenever price approaches a certain color, you will know that which time frame you are dealing with, okay? So this one was my blue trend line. So most probably price was obeying this channel, okay? Let me remove this. Okay, so my price was obeying this channel, okay? From this, my price broke this trend line, okay? Here, it retested it, went to the daily trend line and created a low on the what? On the 4-hour new trend line, right? Created this high, this low, this high, this low, this high. They broke for the first time. This is what we call a false breakout, okay? This was a false breakout. They went back again. Remember that daily time frame trend lines are more powerful than what? Than 4-hour time frame, 4-hour trend lines. But they'll always be relevant, these 4-hour time frame trend lines, okay? So after doing this, we call this now, this is what we call a bearish flag, okay? Whenever you see price moving from upwards going down and creating a channel. This, in a psychological way, it shows us that buyers are struggling to take the market what? The market up. So whenever you now see a pattern like this one, whenever they fail to break a certain level, okay, a certain resistance level, you will know that they are about to change what? To change the trend. So now they created a double top at this resistant area, at this daily trend line, and then they broke this bearish flag and retested it. So our entries, usually we take them on this retest or on this resistant area or on this what? Daily trend lines. Whenever you see something like this, okay? So as for entries now, we go on to the what? To the 15 minutes, okay? Let me try to show you how we do the entries for price action, okay? When we move to 15 minutes area now, that's when they present to us with a very, very good reversal shapes, okay? As you can see here, they presented us with a very good W on the daily trend line. At the same time, they gave us the what? The reversal pattern, W. So whenever you are trading these reversal patterns, okay, the W, on the W, we have the first leg, the second leg, the neckline, and we have the what? The leg line. So whenever you take your trades like these ones, it's either you take your trade on the second leg or you take it on the what? On the neckline. Then your TP is supposed to be on the what? On the leg line, okay? Remember, when you take a trade, you don't have to swing it because you don't know what's happening in the what? In the formation of the market, okay? So this, all of this is accumulation phase. When they approached here, they gave us a head and shoulder pattern, which is this one, okay? Meaning to say, this one is my neckline, shoulder line, okay? Leg level. So as always, my entry on the neckline, on the shoulder line, or on the neckline, then my TP on the leg, okay? They came again and presented to us with this W. The market went up, okay? Presented this smooth W, the market went up. This one was the false breakout. We cannot take it. This W, okay, we call it a break out of the channel. So they came back into the channel and created this W. You can take your trade here going up, okay? So this one is what I want to talk about today, okay? So whenever you want to take your trades, okay, long trades on price action, on higher time frames, you can actually wait for a break and retest of a channel or a pennant or whatever, okay? So this was a break and this was a retest, a very complete retest, which presented to us with a 3 years to the what? To the trend line. And usually when you enter such an entry like this one, okay, you wait for your TP to be size of the what? Of the pole. Because when you are trading this bearish flag, this one is the pole, we call it the pole, and this one is the flag. So the entry is supposed to be on the retest of the what? Of the flag, and the TP is supposed to be on the size of the what? Of the flag, okay? So let me move on to another chart again. This one is like V75. Let me redo it. We were doing crash, so I want to do for the V75, that is the example number 2, okay? Right. Right, I'm going to change my okay, right. As always, we start from the higher time frame, that is D1 or week 1 or whatever, okay, that you feel comfortable with, okay. You zoom out, right? You come up with your what? With your structure, right? First of all, this one is very big, so I'm not going to draw those horizontal lines. I'll just go straight to the trend lines, okay? So I will make sure that I touch at least 3 points, okay? At least 3 points, okay? So I'm going to be identifying these lows, okay? Right? So I have this low, first hit, second hit, third hit, as well as you can see here, right? We have this rejection here, 1, rejection 2, break, retest, rejection 3, rejection 4, rejection 5, rejection 6, okay? Let me take it a bit more, right, like this, right? This is my V75 analysis, right? We move on, right? We want to see how price is moving, right? Control, right, left click, then you move. What's happening? Okay, just a minute, guys. Sorry. Don't know what's happening with my PC. Okay. Okay, right. So as you can see, this was the price movement of V75, okay? They are creating 2 channels, okay? Right? This is channel number 1. As you can see, big movements being made. We are much more concerned about what? About big movements, okay? See at this reaction, see how long this reaction took, and see how long this reaction took over, okay? Then we move on again, okay? There goes another reaction here, and another reaction, okay? So we move on again, okay? Right. Move on to the supply and demand zones, right? Remember, these are horizontal lines, okay? This one is a reaction which took the market down. It's another reaction which took the market down, another reaction which violently took the market down, okay? It was broken up here, retested, and started to take the market what? The market down. So it's a very crucial focal point, okay? Move on again. We are much more, okay. So what I'm going to do is that I'm going to, I'm going only to focus with price from this position, from this low up to this high, okay? So now, this is what's been happening in the what? In the V75, okay? They are just moving within this what? This channel, okay? Impulse, retracement, impulse, retracement, impulse, another retracement, then they are making another what? Another impulse, okay? So when we are here now, okay, remember what I told you, you need to have a third eye when drawing these trend lines, okay? Okay, for example, okay, let me remove this one for in the meantime, right? right, we can see here, right, that from this point, okay, from this point here, okay, our price has been respecting this support line, okay? They reacted here in the very first time. They took the market violently up, reacted here, took the market violently up, went back to this daily trend line, broke it, retested it currently, right? And therefore, they have presented us with a what? With an inverse head and shoulder, okay? This one is our head, right? Our left shoulder, neckline, our head, neckline, back to our what? To our neckline. And remember, when taking trades like these ones, okay? We always take our trade on the what? On the left shoulder or on the neckline, and our TP will be on the what? On the leg line, like this one, okay? So this is just a setup at a higher time frame, okay? Let's move on to 4-hour time frame, okay? When you move to the 4-hour time frame, okay, whenever you see these focal points, there are certain things that we look for, okay, for entries. It's either we look for M's, W's, or we look for head and shoulders. For example, at this focal point, okay, they gave us a W that you see, right? At this focal point, they gave us a head and shoulder, right? This one, it was a slanting head and shoulder. This one, right? Meaning to say, this one was my head, left shoulder, neckline, head, neckline, left shoulder. Then your entry was supposed to be here, or at this neckline. Then your TP was supposed to be at this trend line, leg line, okay? Here, I took this trade yesterday because they presented me with a what? Inverse head and shoulder, okay? So you can see, this one was my neckline. This one was my what? My shoulder line, right? This one was my shoulder line, was my left shoulder, neckline. This one was my head, neckline, right shoulder. Then you shoot your buy. Your next TP, size of the leg, that is here. So if you go on lower time frame now, okay, they will give you very smart entries, okay? As you can see, this one was sort of like a right, left shoulder. They went back and rejected this neckline. They created this head, rejected this neckline. Today they were ranging, creating this what? This right shoulder, entry here, up. We are now anticipating to get our what? Our TP. So price action is very simple, but only simple when you draw quality trend lines and supply and demand zones. Are we okay? Are we together? So, I don't know. If you have any questions, you can ask so that I can add more.
Thank you very much for a constructive teaching on price action. Maybe guys, you can just send your questions on the chat page so that when I see them, I can read them through. Then you can address the questions. And while you're writing your questions, we are very lucky. Someone is saying very innovative, because I learned one or two things that I didn't know about. Sometimes I would just draw trend lines, not knowing where to draw them, but I would just be drawing trend lines. But now I'm understanding it was very well illustrated. Now I know where I have to start from the high time frame going to the lower time frame. So someone is also saying it's well illustrated. Thank you very much. Someone is saying, can you talk more about bullish and bearish flags and how to draw and use them? Maybe we can tackle this one as our question for tonight. Let me repeat it again. It says, can you talk more about bullish and bearish flags and how to draw and use them? I think we are going to tackle this question for tonight, and then we close the meeting. And by the way, guys, all right, I'm going to give you the announcement after the presentation. You can answer this one, say.
Okay. So this is what I want to tell you. Remember when I said these are that's a very good question indeed. These are what we call continuation patterns. Okay, what do I mean about continuation pattern? Okay, whenever we are in a trade, okay, for example, let me go on to lower time frame, 15 minutes, right? Right, okay. Right, this is what happens, okay? When we are actually at lower time frames, usually if you go on lower time frames, okay, we know that we are going up at higher time frames, for example, right? But we are in a what? In a lower time frame. So as you can see, these retracements, you can clearly see them at lower time frames, okay? So I'm going to draw a bullish flag on this lower time frame, right? Using the principle that I taught you earlier on, so that you can see how to do entries on these what? Bullish flags, okay? So this is a downtrend that we are. This one is my highest high and the lowest low is this one, right? Then they created this visible low, created this high, created this low, went back to this high and created this low, okay? Remember, I told you, right? Always mark this, right? This way. Always mark the highs, right? It's my high, right? Up to this level. So unfortunately, there were only 3 highs here, right? Right. So I'm going to try to connect the highs, right? Like this, right? So as you can see, reaction here, reaction here, reaction here. Impulse, retracement, impulse, retracement, impulse, break of the retracement, right? So there goes my flag, right? Go on to the what? To the lowest lows, okay? So now we have 1, 2, and 3 to make it a what? A bullish flag. So this one was the channel that in which we were moving on at the lower time frame, okay? So after this, this is a continuation pattern. This one is what we call the bullish flag, right? Right, let's go on to, I think, on a lower, yeah, right, this one. So whenever you see a channel like this one, right, this one is your pole, okay, from this point up to this one, okay? Then they start to what? To retrace, accumulating more orders, okay? This one is a break, right? They gave us a break, so we're anticipating a retest, then we move forward. So our TP, our entry is supposed to be on this reset, retest, and our TP is supposed to be size of the flag, right? This one is my size of the what? Of the flag. So my TP, I'm anticipating it to be size of the what? Of the flag around here. That's when I'll be anticipating for my TP, okay? And usually when you are trading this this bullish flag, we anticipate for at least 3 touches, okay? First touch, second touch, the third touch. So when we anticipate for a what? For a push to go forth and give us a break and retest. So meaning to say that for a complete flag to be presented, we anticipate for these 3 pushes, 1, 2, and 3 pushes. Then we anticipate for a what? For a reversal. I hope I have answered that one.
Okay, Thank you very much, Say, for a wonderful teaching. Thank you very much, guys, for also supporting him as he was teaching. Like I said, today we did price action. Tomorrow we are also going to do price action with another tutor. Again, I'm sure I was around today again. We are going to do price action again with another tutor tomorrow. So let's support him as well. Then on the following day, we are going to deal with ICT. As yesterday, we had challenges with our audio. I'm sure maybe the day after tomorrow, we are going to have a very good audio. Like I said, this is a presentation platform. We are helping each other. We are empowering each other, giving each other basics to be able to know how we can attack the market, because most of us are struggling. But I believe and I understand that through this teaching, we can be in a better position. So tomorrow, let's come again, same time, for price action part 2 with one of our fellow brothers as well. And again, once we are done with this meeting, I'm going to upload the video on YouTube. So please go on YouTube and check all the videos that we've been uploading. And I'm going to upload this one as well. Please make sure that you revisit them and learn. Thank you very much, Say Nick, and thank you very much, everyone who have attended. I have a blessed evening.
Okay, that's Nick Toramari. Thank you so much.
Cheers, bro.
Okay.